Hello and welcome to Rand Squawk Weekly Wrap video. So the main theme of the week has been the pain in Spain, particularly focused on yesterday's release. That was the Spanish 2013 budget, where the government did unveil a relatively aggressive set of budget cuts, that is spending curbs and tax revenue increases, in order to shore up the troubled government's finances. But one thing that did particularly take some focus was the Spanish government's announcement that they are to reach into one of their social security funds in order to cover their short-term liquidity needs. That did prompt some to speculate that the Spanish government may be putting off some of their imminent need to request sovereign aid. But in terms of data releases this week, we did see Q2 GDP from the US being revised lower to 1.3% from the previous estimate of 1.7%, but a slightly better picture for the UK, with their Q2 GDP revised higher to a contraction of only 0.4%. So the focus for next week will lie on the shoulders of the central banks, as we do see action from the Bank of England, the ECB, the FOMC, the Bank of Japan, as well as the RBA over in Australia. But starting off with the Bank of England, they are expected to keep their policy on hold on both counts, that is both their quantitative easing programme and their base rate. And then as for the ECB, they're also expected to keep their rates unchanged, with the focus being on any commentary from the President Draghi, where there are still a few grey areas that need to be cleared up regarding their bond buying programme. First of all, some sort of timeline as to when these bond purchases are expected to begin, as well as any further conditions that could be attached to bond purchases. But a lot of the focus next week will be on the FOMC, with the minutes release of their September meeting, where they did decide to announce their QE3 programme. So any commentary regarding the pros and cons of this will be carefully eyed by the markets. But as for the Bank of Japan and the Reserve Bank of Australia, both expected to keep their rates on hold and their asset purchase targets on hold, as the Bank of Japan did recently ease following in the footsteps of the FOMC. So that is likely to be the focus of next week, and as always we will bring you that as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a great weekend.